to the Trading Market Technicals Morning Call video for Wednesday, February the 12th. Nice day in the markets. Dow Jones up 192 points, Nasdaq up 42, S&P up almost 20 points, and the Russell up about 10.5 points. And the good thing about it was there was a little volume behind it, so that was actually really nice. And markets actually rallied on the new Fed chair comments coming out of Janet Yellen and their hearing yesterday. So markets were satisfied. Everybody knew what she was going to say, basically, and there was no change in her comments. So no change in her policy at the moment. So markets like that, and we rallied 192 points. However, we are now at a point where the markets are either going to roll over or they're going to continue its move higher and challenge the high. So it's going to be a tricky day today. We're up now in the pre-market about 3 handles. We also had some very good China import data that also boasted well for crude oil. Actually, crude oil imports from China rose to an all-time high of 28.16 million metric tons in January. So strong data is definitely a positive for the marketplace. Had some comments coming out of Bank of America, Merrill Lynch, telling that the numbers may be a good point to be stabilizing its economic growth. So that in itself is a positive. Asia's up. European markets are up as well, and we are now up around 3 handles. That obviously could change before the market opens today. So I'm looking at some key levels I'm going to show you. I'm not saying that we are going to short the market. We are going to short the market until it gives us a sell signal. Once it gives us the sell signal, and I encourage it to you as well, saying that if you have, obviously follow your trading plan and what your sell signal may be, follow it. We don't just go out and short the market because price is at this level. Price could easily just continue to move higher. Okay, what are we doing until the markets? Now the markets came pretty far, pretty fast in the last 5 trading session, and that's basically the norm. The last 2013 and now the beginning of 2014. 5 days straight down, 5 days straight up. It's just literally crazy. So when you position yourself and you having longer term trades, whatever, your account is going to fluctuate, and you're going to need to know that and you need to understand that. If you can't stomach it, then you shouldn't be doing that, and should only be looking for day trades. I am going to be looking for today quality trade setups and watching closely at our internals, because we do have a little bit of market divergence where some of the 5 indices that we follow, some are lagging, some are actually gaining some strength. So we'll show that to you in the chart segment. So let's just go right into the indicators. I'm not going to show you too much. What I will show you is the VIX here. We have the VIX broke below that 200-day moving average, okay, and now obviously next step would be down below here. I personally would love to see the market gap up, run hard into around 11 o'clock, into some key areas of resistance, which I'm going to show you again, and then start to roll over. And if we do roll over, that market is probably will be starting its next leg of a correction. If the market does challenge itself, challenge the highs, that doesn't mean that the markets are out of the woods and we're going to go high and we're going to continue to run high for the rest of the year. I don't think so. I think the markets need a break. A 5% correction is really not much, and a 5% correction in 7 trading days is really not much at all. Markets didn't really sell off too hard. Yes, some of the higher beta names, they got hurt, but they're starting to recover again. So, the bottom line is this: can't fight the Fed, but you really need to now, most importantly, pay attention to key indicators, your breadth of the market, and exactly what's going around outside of your vision of what you're looking at for the course of the trading day. Okay, now let's take a look at the stocks above the 50-day moving average. And all this is doing is getting back to a back test of this symmetrical triangle here. So nice trade off the lows. This is a good spot for it, as I mentioned, here and here, good selling areas, good selling areas. So this is a good spot now that we're coming into this area of resistance. So let's just see what happens. Again, these indicators are lagging to price, so we want price and volume to confirm what our indicators are telling us, and we'll get a little bit more behind our trade. Here is the US dollar, and the dollar is interesting to me because if the markets are recovering, the place to go is going to be the dollar, right? And that's why we look at the dollar yen during the day as well, because we're looking at our yen trade, and so is everybody else, and we want to follow suit of what the herd is looking at. You want to be a little bit more nimble, and you want to be a little ahead of the curve. So now we have the US dollar here, and it's still within making higher highs and higher lows. Yes, it is kind of bullish. We have this ascending triangle. However, we have indicators rolling over and barely holding on to this trend line. If this breaks, I think the market's going to be in trouble too as well. But that would bode well for what? Commodities, right? We have gold and oil ticking higher. I'll show that to you in the chart segment as well. I do like that trade. And we have crude oil not ticking higher. So when we have lower prices in U.S. dollar, we'll have firmer commodity prices, okay? Now, let's take a look at, speaking of that, let's take a look at the silver. Love the silver trade here, guys. It's basing. I love the base formation. Now, remember, that doesn't mean that this can't break below the base and just go lower and resume its trend, because technically we still have a bearish pattern, right? Lower highs and lower lows. We have big sell-off. Now we're just consolidating. We could just continue lower. There's no question about it. But the reason why I like it, it's easy to manage. A break below this double bottom, I'm out of the trade. If we take out this 2050, we're going to take a beeline right to the 21.8018, which would be the 200-day moving average. Now, crude, lot of emails. Should I get in? Should I get in? No, absolutely not. We're at the 20-day moving average. With the 20-day highs. We did break above the 200-day moving average, so it is quite bullish. And I think 101.5, 102 is quite easily to maintain, but you don't want to be chasing this thing. I mean, this could easily roll over and get back into the 98.50 area, okay? So, no chase. If you're not in it, you missed the trade. You're just going to have to wait for a pullback, a decent-sized pullback, okay? Right now, we do have some good catalyst. We also had some good numbers in the API data. American Petroleum Institute came out yesterday night with their data, and they also favored a draw. Today, we're going to have the Department of Energy coming out with their data on crude oil at 10:30. So remember, it's going to be a good back and forth type thing. So I still like crude, but if you're in it, if you're not in it, I wouldn't be chasing it. Okay. McClellan oscillator last. Now we're getting back up to the upper end of this neutral range. Still got plenty of room to run, guys. Okay. So technically, we are not officially overbought at the moment, and when we get above 70, 80, then I would be cautious. Okay, as you can see, every time we get to these Bollinger Bands, they sell off. The market sells off, all right? So use a little caution here, but we still got a little bit more room to run to the upside, I think. Here is our Japanese yen, okay? And as you can see here, we're really just kind of bull flagging right into support. We are below. We have a little cluster here. We have the 38.2% Fibonacci, and we have some extensions in here. So it's holding for now. But if we break back up out of it, then I think we're going to have some selling pressure in equities. Here is the ES, the daily chart. And as you can see, we're running right into this band of resistance here. The 1820 to 1850, got about 20, 30 points in here, but we've got a lot of resistance up ahead. So maybe we pop into it and then fail and make that lower high from this previous high. Then I could see some bearish symmetry starting to form, and we start to roll again. Okay, but I still think it needs a little bit more work. As you can see, the daily chart, we have our volume, which was much better than the 4. But if you have the last 6 days, right, we only had volume on Friday and volume today. So still, I'm suspect of the rally. I'm a very cautious bull, and I am willing to sell this market when the market starts to roll over. Here is the 1-hour chart just to show you my levels here. 78.6% retracement from the previous high to this current low. We are back at these levels. We also have a horizontal area of resistance. So we do have some confluence area of resistance here. It's going to need to break above 1820. Now, if we close above 1820 on a closing basis, then we're going to have to still wait and see. Because that candle, that hypothetical candle today, if it does close above there, it's going to need to take out that that low for today with that formed in that candle in order to start alleviating. But don't forget, look what's happening here. We have some bullish symmetry here on the on the moving averages, 8 to 20 to 50 to 200. We also have higher lows and higher highs and higher lows. So nothing wrong with this, right? Bull flag, bull flag, bull flag, bull flag. So although volume is light, doesn't mean you still can't trade it if you are an index or trading the index. Okay, now let's go take a look at our sort of a little valuating chart here of certain indices. Here's the spiders back up to this area. Okay, let me just get that out a little bit more. Basically just back testing this area. Now, here's the concern. Why is gold moving higher when gold should be moving lower? Probably an inflation issue, right? We have nice confirmation that that bonds are actually moving lower, which is okay. Here's the concern, right? Why is gold moving up? Now, this could easily just pivot here and start to run up higher, and then what I don't like is really, this is a bearish pattern here, guys. This here is a bear flag, okay? You could call it an uptrend channel, but to me, this is a bear flag. Classic bear flag. And that is something that's a concern to me. And that usually is what happens. It breaks back down and back tests the upper trend line. So that is a concern. If this breaks this lower trend line here, then I think all bets are off to the upside. And then we make that pivotal low from this previous high, that lower high from here, that is going to be a concern. And then if we obviously take this little cluster out, then I think all bets are off, and then I think we start this correction. Okay? Now let's take a look at, real quick, at a weekly. Very, very nice. We put in that hammer. We tested this uptrend line. Nothing wrong with it at all. Longer term picture, markets look great. No reason to get nervous. No reason to get shaken out of the market until we take out this low. And when we start making now, we start to roll here, right? And we put in a weekly low, and we make now lower low from this previous high. That's the concern. That's something that you say, okay, I got to now either tighten my stops, buy protection in my portfolio. That's what you want to look at. Other than that, looks fine. There's nothing wrong with the market. Longer term. Now, here, as you can see, we had a nice 5-day up. Okay, we did have a pause day consolidation yesterday. We have better volume, which is nice. We crossed over the 20. We're crossing over our MACDs. Histogram making lower lows, higher lows and higher highs. Very nice. I like the bullish outlook here on the spiders. However, we are now getting into this overbought area here. Okay, and this is something that is a concern. If you're not concerned, you should be, because of the fact that we have resistance here. See? So we want to watch this area here, guys. Today, tomorrow, it's going to be interesting, to say the least. Transports. Here is one of my problems. Transports, our leader, not leading underneath the 20. Didn't even get above the 20 like spiders did. And again, put in a candle here. Not really encouraging with volume. Really stuck here in this area. So the transports aren't doing too well. And that's a concern to me. The Russell, not doing too well. It is below the 20 as well. So that is also the secondary leader not leading, where you have the spiders leading, which is not a leader. It's a follower of the index. That's not good either. Okay. Qs on another note, actually doing quite well for the help of Apple and Tesla and Netflix. They're doing well. That's actually running this index up. So I would say a little skewed, if you will, on the Qs here. So something that I'm a little concerned with as well. But again, that is a good sign of the indices. Here's the Dow Jones. So most of the indices that we follow, they're below the 20-day moving average. So that is a big concern to me, except the Qs. All right, now GLD, again, just want to show you the GLD, the gold ETF. We broke back above it. Logical spot would be either to run right up or a back test and consolidate and then push higher again. So that's what could happen, okay? But again, I wouldn't be in the gold trade. If you're not in it in this area here, no sense getting in here and having your stops way down below here. Doesn't make any sense at all. Here's the oil and gas exploration, the XOP ETF, doing okay. Looks picking up a little bit better. And again, I mentioned that I love the oil services, the Schlumberger, the Baker Hughes, the Halliburton. They all actually went very, very nicely. So if you were in the trade, hats off to you guys. Yet you have to kind of swing trade that, though. I wasn't really swing trading a lot of these stocks, but great trade setups. And here is the XLE. And this here right now, I like the XLE. I like the components in that sector. But again, right now, it's got to alleviate this bear flag, if you will. And that's something that right now I wouldn't be interested in buying unless it got back above into the channel. If it did in base, then I'd be interested in looking at a long trade here. Right now, it's bearish. Next break below it, you probably test these lows here again. But something to look for in the coming days. Now, USO. Consolidating back up in here. Again, same thing like the WTI crude, 20-day highs. All right, we're at the upper end of the Bollinger Band. Now we're going to need to really accelerate out of this area. Crude oil is up 58 cents, $100.52. So it's going to really need to break out. But once that does break out, guys, you're going to get a big move higher in crude and probably see $37.50, $38 in the USO. Okay, construction. One note I want to make, seasonality. I looked at the almanac. Home construction starting to come to an end as seasonal strength. So what you'd want to do is, if you're long, tighten up stops, and then see what happens here. But I would be looking to accumulate a position in the construction area here on any weakness. Any weakness back down to any of these higher highs and higher lows, I would be adding to. And here is XHB. Same thing. Okay, Lennar doing really well. So if you took it right from here, you want to tighten up your stops. PHM, here sitting right up in here. I do like the home builders, and I'll tell you, a little more consolidation. Now we are coming in again into some seasonal weakness, so maybe step aside and wait before you re-enter the trade. Let it build a nice base here, and then look for some continued movement to the upside. KBH, again, one of my favorite. Look at this base building here. Beautiful, beautiful. Half of 2013, and pretty much right now we're still in this area. I love the KBH. But you have to be patient with that. XLF, the banks, starting to come to light again. A little bit of life in it. XLF, back above the 20, back above the 50. Looking constructive to the upside. Volume a little anemic, but it's not bad. We have an inside day on Citibank, but I do like the Citibank. I'd like to see it get above the 50, chop around a little bit, make another base within here, and then I would look to take out. I would look to get long this for at least test of the highs in Citibank. JP Morgan, much better trade here. JP Morgan much stronger. It's now actually filled this gap. Let's see if we can pull back a little bit, make a little movement, and then I would look to buy that as well. JP Morgan. Goldman did much better, obviously. Now, it is back above the 200-day moving average. So let's see if we can, if this could take out the 180, 166 here, I think I'd look to get long Goldman again. Goldman being a much faster and obviously much more movement in the stock. It is a $166 stock. So back above the 166.5, I like that. I like Goldman. And then lastly is Apple. Okay, guys. So today's going to be important. We're at some pivotal resistance areas. So it's either going to break above it, and if it breaks above it, I still will look for failure. Okay. So what we're looking for today, we're cautious bull. We're still looking to buy pullbacks, but right now, as I'm speaking to you, we're up 5 handles in this morning call video, and now we're only up 1. So I think the markets are tired. I think we are due for some sort of a pullback here. Let's see how. Let's see what happens early on in the morning. If we do get that big pop up, that gap up, and we pop higher, look for failure. If we don't look for failure, then look for the markets to continue. That's going to be my plan for the day. Have a great day. We'll speak to you tomorrow. Take care.